Hey, everybody, to Trading Capital's exclusive analysis. Today we're seeing a really harsh decline in crypto. And the question is why? Are all of a sudden, after Ethereum breaching all-time highs on the weekend on Friday, it is seeing a nasty reversal from the highs and currently trading down 8.63% on the session. We actually executed a short on the Friday candle with members. That was a member alert, and that short is playing out quite well. Just looking at the ETH long-term weekly chart, you can see this parallel channel where we've really had some massive pivot high resistance points and some epic pivot low resistance points going to 2018. Your lows down here, lows, highs, lows, highs. So obviously, whenever you hit a very strong long-term resistance zone, mixing in with a double top, there's very likely scenario that you get a pullback, and this is what is technically happening today. Ethereum is really doing what I like to call a bullish trap. Again, my members received the short alert on Friday, and this trade is working out quite nicely. The trade is now risk-free, but we are short the crypto market. If you look at Bitcoin right now, Bitcoin is also going through a bit of distribution and breaking down a little bit more. I put this on the live stream today to members. I said, is Bitcoin going to give us a bit of a lower low? And the question is, in 29 minutes, when this daily chart candle closes, Bitcoin has finally put in a lower low. That is a very bearish sign in the near term, and it does swing the probabilities to much lower price action in the near term. That being said, if we throw in some of the key moving averages, let's look at where BTC is currently trading. BTC is currently tagging and eating away at that EMA 113. Last time we tested it was off of this area. Last time we broke through it was off of this area. Considering Bitcoin is testing this long-term daily chart moving average, I do think that there's a chance it can hold. However, we have to really see what type of pattern builds off of this EMA 113. If you start losing it on a daily close, then that could be very bearish in the near term. Looking at the hourly chart, we are potentially starting another bear flag formation, so that needs to be watched accordingly. Looking at the weekly chart, Bitcoin is currently just a little bit away from its weekly 20 moving average, so it does indicate that there could still be potentially a little bit more downside. But when we look at the total crypto market cap, there's certainly some individual crypto stocks that are holding up much better. But one thing I want to point to your attention in the overall crypto market cap, you have potentially this very defined head and shoulders pattern. If you draw your neckline across that, look at what we're doing. We're doing what I like to call a peekaboo breakdown. This is a daily chart breakdown that closed in 27 minutes. It's looking very likely. And then we'll have to see if we get a confirmed candle close. If you get a confirmed candle close, where is the downside potential? We're talking about another 12% down, which would take us back to this original inverse head and shoulders neckline retest. So just be aware that crypto could be in for some tumultuous price action in the near term. And my members are short Ethereum. We are short long BITI off of this 1729 zone. So we are deep in the profits on our crypto trades, and we are looking to print more. Now, jumping into a couple other stocks, looking at opendoor technologies. I know a lot of people are bullish this name and trying to buy the hype. I just want to bring to your attention that this is a nasty epic daily chart reversal candle, 763 million in volume. Really, this is the most amount of volume that you've traded since you had this epic pop to the upside. Last time we saw this epic reversal on a weekly basis, open ended up proceeding to fall with about a 55-56% range. Just keep in mind, this stock is not a profitable stock yet. It is actually burning through a whole host of cash. If we actually look at some of its metrics on a quarter one and quarter two basis, we're going to look at the total revenue. So revenue for quarter one came in at 1.15 billion. Revenue for quarter two came in at 1.57 billion. If we look at the expectation of what is occurring for basically Q3, only 856 million. So if we add up 1.15 billion, if we add up 1.57 billion, and then if we add up the 850 million, and let's assume Q4 is the best quarter it has, and it prints another 1.57 billion, it's only set to earn about if you're being pretty optimistic with the stock, it's only set to earn about 5 billion in annual revenue. And we look at the previous years, 5 billion is slightly under its 2024 revenue. So I really don't like that aspect. We look at its net income, it is still burning through cash. It's not profitable. Although it's trying to strengthen, you're currently on a track rate to burn between 200 to 300 million in net income. So again, just be very cautious buying this company because with the housing data that we got today, strong building permits, strong housing starts, you would have expected that this stock remained a little bit positive on the session, considering that it is a real estate stock. But when we look at what else happened today, the Dixie pretty much rallying and engulfing, almost recapturing that whole entire Jackson Hole reversal candle. So it's certainly looking very, very positive. The US dollar, we also had crude oil spiking to the high side, trying to make a little bit of a run higher. Please give this video a like down below, and we'll see you on the charts a little bit later.